Good evening, everybody, and welcome back to the Prosperity Builders broadcast. And tonight we have a really exciting episode to share with you. Scott, who do we have coming in tonight?
Well, I'll tell you, we've got one of my best friends, one of my favorite individuals in the whole world, and we've got David Childs joining us tonight. David is the Chief Listening Officer and Chief Executive Officer of Spartan Planning. And so, welcome, David.
Thanks.
Glad to have you
here.
So
glad to be here.
Yeah. Well, one of the things that was exciting for us about having you on was, we are the prosperity builders, and so one of the things that we've been really focused on with our agents and with our clients is how to build prosperity, right? And so that has taken on a broad, swath for us over the last couple of years. And so, you're in the business of helping people build prosperity. So tell us a little bit about Spartan and how that got started.
Yeah, we're a boutique wealth management firm helping successful executives and entrepreneurs make work optional. And so, one of our goals is creating that stress-free financial life. And it came from a long journey of really seeing what I originally, in high school had no desire or going even through college to be in the financial world. I actually was trying to go in the military or become a police officer. But I started seeing what I could do and what was not being done well from my perspective when I saw how my family and friends had their money being managed, and I saw that there was so much better that could be done in the financial world.
Wow. I'll tell you, I love that because that's our focus too, is really looking at how do we redefine and improve the customer experience. And there's a bar of entry that we want to far exceed, and so I love that that's your focus. So what I love about your title, Chief Listening Officer. So tell me a little bit about how you came up with that, and what's that mean for Spartan?
Well, one of the things that I've seen in the financial world is that it's already an intimidating thing to come in and talk about finances to a lot of people. Just like it can be to go to a physician the first time. I mean, it's a big deal to open up and talk about your finances that probably no one else in the world knows about, except for maybe you and your spouse.
Right.
And so to come in here, we need to make sure that they feel comfortable and that they feel like they're going to be heard and listened to. And if we don't sit there and listen, instead we come in with an agenda or a product to sell or something to convince them into, that's not going to provide value to them. And so we really need to be there to listen to their goals, and then and only then to explain how they're progressing on the path to their goals, and then show them a way to get there.
Well, one of the things that we were talking about a little bit earlier was the difference between what a traditional advisor does and what a fiduciary advisor does. And so you guys are a fiduciary advisor for your clients, and tell us a little bit about that differentiation and why that's important.
Yeah, and it's a soapbox I get on a lot, and I need to be pulled off of it sometimes, but it is important. And only 2% of advisors are full-time fee-only fiduciaries. And so a lot of folks hear that word and they say, well, what does that mean? Or they maybe have some connotation of what it means. But the financial industry is traditionally built in a suitability standard, which just means I actually have to, so not I, but a traditional advisor has to serve their firm's interest first, then find something that's suitable, that kind of matches along with the facts and circumstances of their client. Well, we're in the 2% of advisors who actually have a legal obligation to the client first. Then you have to figure out, can we have a business model to fit?
That's incredible because we're fiduciaries to our clients, right?
Absolutely.
Michael?
Yeah, absolutely. I mean, our first obligation is to the client and their best interest, and that's the way you run your model.
Yep.
Well, one of I know you probably have some questions that you're asked very frequently by people who come in who are curious about how you can help them grow their wealth. And one of the, I think, big things that we've looked at is how much do I need to be able to retire? Right? And so that's different for everybody, but tell us kind of as you walk through that process with a client who's really trying to figure out, how do I get from point A to point B? What's that kind of look like as you navigate that process?
Yep. Well, something that one of our advisors says a lot, if you're not measuring, you're guessing. And so the first thing is have a plan, right? Have someone who's guiding you through a plan and make sure that I actually know, what am I supposed to be measuring? And so that does involve sitting down and looking at trying to define your goals. And once you define your goals, being able to track the progress along the way. And so, but yeah, a lot of people come in and say, what should my goal be, right? Or what is that number? Or how much can I live on when I do retire? And so quick rule of thumb is you want to have a withdrawal rate when you're getting towards retirement, or we like to retire into things instead of from things.
Right.
And so it's not this end point where you just stop, but it is a beginning point of turning on a different income stream.
Yeah.
When you're getting there, you probably want to have between 20 and 30 times the amount of money you need to draw out of your portfolio. A way to back into that is it's 3.5% to 5% of a withdrawal rate from your portfolio. It's kind of what you want to have in mind. So if I want to live on $50,000 a year, I would want to have at least 20 times that, or $1 million saved up.
Only $1 million.
To provide
Just
for
$1 million.
that, right?
Just $1 million.
And so it backs into, you take out Social Security and pension sources or anything else you might have from another income stream. But that's a quick rule of thumb to know, what is maybe a target to be aiming for, and ultimately get a competent financial advisor to help you work through what does that mean for me.
Yeah.
The type of people that come in to work with you are not rookies or someone who has no idea, right? I mean, they have some sense of what they're looking for. But how do you take them from, I think I know what I need to do, to what they really need to do?
Yeah. Well, that's a really good point. And I would even say for those listening out there, there's a lot of folks who are incredibly successful executives and entrepreneurs who actually don't know what to do. And although, on the surface, they aren't rookies and they're very experienced, don't let it intimidate you into not starting. Right? Because they come in here and there's people who have gone for 20, 30, 40 years in a successful senior executive role, sometimes in publicly traded corporations, and they don't have an estate plan.
Wow.
Right? And so
Yeah.
it's not abnormal, and the best thing is don't get intimidated and just start asking. And so we just want people to come in. We want to listen to them by being that chief listening officer, and make sure that we hear their goals. And sometimes they can express the goals very directly, and sometimes we have to listen and find the goal and then bring it up to the surface so they're aware of it.
One of the things that you've done really well is extract information. You're great at asking questions in addition to listening. So sometimes we don't know necessarily what to ask or what to say, and so when you're having someone draw that out and say, so have you thought about these things, and what's your current standard of living? What does it look like what do you envision your retirement looking like? Helps you comprehend what we may not be able to get a grasp on, which is the kind of lifestyle that we want to live, when we retire. Some people are like, look, I want a nice quiet little cabin in the woods. Some people are like, I want to travel the world. That looks like two totally different things, doesn't it?
Yes, it does. It really does. Well, and again, that's why I try to help find something to retire to.
Yeah.
Even if for folks who are in jobs they're not particularly satisfied with, I still don't want them just to run from that. Now, maybe that is a goal to escape that, but we have to have something to go towards. Or we've seen some folks retire from with a lot of money and find out they don't have a purpose. And so I want to make sure long before retirement we've discussed that with people we love. We discussed it with a financial advisor.
Yeah, that's really important, because I think we talk a lot with our agents about thinking about what your end game is. So not just what your exit strategy is, but what kind of life are you wanting to build towards, so that you're building multiple revenue streams to be able to get to that point. And so, to have an end in mind is critically important.
Yeah.
Well, hey, one of the things that we've talked about is inflation. That's been hammering in the news, and it's been hammering all of us. I think it was 6.88 or something like over the last quarter. So I'm imagining you're getting a lot of questions about how do you protect your clients against what's happening in this inflationary environment. So kind of give us a little bit of a tidbit there about how you're helping people hedge that.
I have a 30-second, 30-minute, and 30-hour version of that, so we'll do the short version.
Yeah.
I'm not sure the date this is airing, but we'll probably tomorrow see a print of probably 7.1 or 7.2%. Again, I wasn't born the last time inflation was this high, which is pretty shocking. I'm young, but I didn't think I was that young until I heard that. And so it's been 40 plus years since inflation's been this high. Now, is it going to be transitory? Is it going to, all these words that they're throwing around in the news. Well, am I spending more money at the pump? Am I spending more money at the grocery store? What does that mean for my life? If inflation keeps up for a significant period of time, we darn well better have a plan. And so one part of that plan is not just sitting in cash, right? A lot of times the inflation can drive fear, and it can drive people to panicking. Go hide.
Yes.
Well, that's a guaranteed loss every single year of purchasing power. And so if inflation was 7% a year, then in 10 years, your money's going to be worth half of what it was before.
The question I have for you, because it's one I would be asking if I was meeting with you, is you've now given me an idea of what my plan's going to be. How are you going to make sure I stay on target with the plan?
Well, as part of being a CFP, I actually have to have kind of a designated way to achieve that success, right? And so there's 3 things that I want to do with any client that walks in. One is make sure that they know their goals, make sure they know the progress along the way, and then how to get there. So am I making progress, and then how do I make the progress? We take a very active role in managing the portfolio itself, which is kind of the fuel to make sure the car can keep going. And so, it wouldn't be a set and forget, hey, here's an allocation, go do it yourself, see you in 10 years. And not that someone can't manage their finances on their own, but if they want help, it's something we actually execute the strategies on their behalf to make sure that the portfolio keeps growing the best that it can.
Okay.
Well, David, one of the chief questions that I think I walked into your office wanting to know was, how do I stop making the same investment mistakes? So what are some of the key things that you see investors making mistakes in today's market?
Yeah, well, emotions. So,
Yes.
Ira, one of our advisors, he's actually 82 years old, and he's been on Wall Street for 6 decades almost. But one thing he says is not having a plan, or having a plan and not sticking to it. Right, that's one of the most blunt ways of saying that, and it's because humans are driven emotionally.
Right.
And so even the most, in fact, I would say research has shown that the most intelligent people sometimes struggle the most in the markets. And so there's a lot of people that say, I've been really successful in my career, I've been really successful driving a business, so I can manage my own investments. And really that's pretty counterintuitive when you look at the data, or it's counter-truth when you look at the data. And so a lot of the investments, or a lot of the investment mistakes are reacting emotionally. And so it would be thinking that I'm just going to sit through this next crash because I did sit through the last one. And the 2 things you have to look out for is, what if this crash doesn't come back as quick? Or what if I didn't react the same way? What if my emotions take over, my life circumstances take over, and I panic? And so there's actually research, it's called the Dalbar Index, and it's about a behavior gap is what they call it. And over the last 20 years, there's been a 3% per year, so percentage points every year, 3% gap of underperformance by the average investor compared to the goals they were seeking. And that's because of the emotional overreaction. And that could be $1 million, $2 million, $3 million bucks
Absolutely.
impact over the
Very
your
interesting.
career.
That's scary to think about over the long haul,
Yeah,
right?
yeah, absolutely. Well, Dave, if somebody wants to reach out to you and see if they can get an appointment to discuss their financial opportunities, how would they get a hold of you?
Yep, so you just go to SpartanPlanningGroup.com, SpartanPlanningGroup.com. You could email hello@SpartanPlanningGroup.com, but our website, Spartan Planning Group, has a contact us form, and you can actually get a copy of this Avoid the $1 Million Mistake, which actually addresses that Dalbar behavior gap, as well as 3 other major mistakes that people make.
That's great.
Well, we are really grateful for you spending this time with us this evening, and it's going to help a lot of people out there, and we really, really are grateful for your time. So thanks for joining us this evening, and we'll stay tuned for our next episode, and thank you for coming tonight.
Thanks. Good night.